You've saved some money and now you can't wait to grow a sweet nest egg out of it through investing. But watch the fine print. Hidden fees can reduce your earnings by a lot, even thousands of dollars over time. Fees for buying mutual funds can vary wildly. Some may charge a front-end load as high as 5.75%, which means they take that much of your money before you invest any of it. And some index funds charge almost nothing to buy them. For example, Vanguard doesn't charge a commission to buy its S&P 500 index fund and charges a fee of just 0.14% a year of the money you invest as an expense ratio. And over time, higher fees can reduce your potential earnings by a lot. Surprised? You're not alone. Fees can sometimes be just plain confusing. Sure, brokers and funds have to tell you about them. It's the law, but that doesn't mean they can't bury the details in lots of fine print and jargon. But whether you know they're there or not, fees essentially cut a hole in your investment money bags. Your hard-earned cash leaks out over time instead of staying put and benefiting from the miracle that is compounding interest. That's why fees can do more damage the longer your money is invested. To figure out your fee situation, the jargon you need to know is expense ratio. For mutual funds and ETFs, that's the amount it costs to operate the fund in a given year, divided by the average amount of money invested in a fund in the same year. It's usually going to look small, just 1% or maybe 2%, if that, but they're different for every fund, and even small differences really add up over time. As a rule of thumb, try to keep cost ratios below 1%. And if you stick with passive investments like index funds and ETFs, you can even aim for below 0.5%. In fact, the largest passive funds charge about 0.1% a year, compared to 0.4% a year for the largest actively managed funds. Also, beware of something called a front-end load, which means a fee that is charged upon purchase of a mutual fund. Some front-end loads can go as high as 6%. So overall, make sure to shop around for low fees. Take your time to read the paperwork and figure out exactly where your money is going. These days, a lot of fees and commissions are going the way of the dodo, so don't just accept them. Understand why you're paying them and consider whether you could find a similar investment at a much lower cost. When it comes to investing, reading the small print can make a big difference. And if you don't understand it, don't buy it. Comparison shopping for funds is important. You've worked hard for the money, so it's worth the effort to make sure it works just as hard for you.